Hi there. This is the second video of a series about the most important win-win-win measures. So in the previous video we spoke about veganism, how veganism can have multiple benefits for human health, the environment and most of all the animals. In the second video I will talk about another win-win-win measure that has multiple benefits. So this is a green tax shift combined with a universal basic income. So how does this work? Well, a green tax shift means increasing a taxation on, for example, the use of natural resources and decreasing the taxation of labor. So why do we have to tax the natural resources? Well, natural resources, they have an economic value. If you own a piece of land, this piece of land has an economic value. So in economic terms we can speak about what is called economic rent or Ricardian rent, the economist David Ricardo, or what's often called surplus profit. And so the use of land, minerals, water, fuels, whatever that nature provides us, for example, the carbon assimilation capacity of the atmosphere. These are all finite resources, and we did not create these resources. We cannot create more land. We cannot increase the size of the earth. And if you look at it economically, these are scarce resources, and there is a demand and supply. And well, with these resources there are no production costs. That means that the supply is constant or perfectly price inelastic. So if you look at the supply curve, in the supply and demand curve, the supply is a vertical line, which means that the price it's price inelastic. There's a constant demand if we cannot create those or produce those resources. Now, if you possess a scarce natural resource, you basically obtain a monopoly over that resource, which means that you can enjoy unearned income from owning that property. This unearned income or surplus profits is actually the bad thing in economics. So in a capitalist system, for example, there are normal profits. To produce things, you need labor, investments, taking some risks and so on. But these are normal profits. And the problem in economics are the privatization of surplus profits, so profits above those normal profits. This income is undeserved because it is not the result of, for example, labor, of risk-taking, of entrepreneurship. Yeah. So if you work for something and then you own that product, you own the result of your labor. That's your property. And this added value, this economic value, that's if you earn some income from that, selling the product that you produced, that's earned income. But if you did not produce the product and you sell it or rent the product, for example, if you rent land, then you earn some unearned income. So the unearned income is the economic rent of a natural resource, and it's the surplus revenue above what is required for a company to generate normal profits. So to generate normal profits you need labor and things like that, capital. You have basically three production factors: labor, capital, and land or nature. You can also look at it this way: if there's an auction and the government, for example, sells a piece of land, it's the value, the economic value of this piece of land that no one produced. It's the price that the highest bidder is willing to give, is willing to pay. That's the value, the economic rent value of this piece of land. Now, the tricky thing with this owning these resources is if you own a piece of land, no one else can own it. It's an exclusivity or a monopoly that you have acquired by the appropriation of this natural resource. So it means that someone else can no longer use that resource. Natural resources such as land and raw materials are in this sense excludable. They can be exclusively appropriated, and its own use or possession excludes its use or possession by others. Now you can say that nature, what nature provides, is a common good. Yeah, it's a commons. So the value, actually the value of nature, belongs to everyone. You cannot simply own it. If you claim for yourself a piece of this value of nature, of what nature provides us, and if you exclude others, actually that's causing a kind of harm to the other people who are excluded. Yeah, and here is where the taxation becomes important. So a taxation of the economic rent of a natural resource is actually a payment of a license to use or possess the resource. So all natural resources belong to the community, and if someone wants to possess a part of the resource, one has to pay a fee to the community as a kind of compensation or remuneration for the exclusive ownership that you acquire. For example, if you emit a ton of CO2, the assimilation capacity of the atmosphere is finite. So if you emit a ton of CO2, you appropriate for yourself, you claim for yourself a part of this finite resource, the finite natural carbon assimilation capacity. So that means that someone else can no longer use a part of nature. Yeah? That part of the CO2 in the atmosphere, it's absorbed by forests or ocean, and you claim a piece of forest or ocean or atmosphere. And to avoid global warming, we have to limit the CO2 in the atmosphere. So that's the finiteness of this resource. If you emit this ton of CO2, you claim for yourself a part of this natural assimilation capacity. You exclude others from using this part of what the Earth provides us. And this exclusion is a kind of damage towards others, and you have to pay a kind of remuneration. That means you should pay a carbon tax as a remuneration to the community for the exclusive right to use that part of the finite assimilation capacity. Yeah. So the same goes for other kinds of pollution and for other kinds of resource use. If nature provides it, it's finite, and you exclude other people, you basically have to pay a tax. Yeah. Now, okay, so the government receives revenues from these taxes. What can they do with it? Well, part of the revenues can be invested in public goods or scientific research to invent some new climate-friendly technologies, for example. But a part of these government revenues can also distribute it to everyone in the form of an unconditional universal basic income. Okay, so suppose that all the value, the economic rent, or all the, where you see in the economic system, all the surplus profits, if these are maximally taxed and the government revenues are distributed as a universal income, it basically means that so the economic value of a part of natural resource to which someone is entitled, basically the government redistributes this the value of what that nature provides us. Everyone has a fair share, an equal fair share of what nature provides us. So that means that, for example, large landowners, so the landlords or the bankers who own large properties of land, resource owners, mining companies, for example, and large-scale resource users, heavy industries, rich consumers who have a lot of precious minerals, land, things like that. They will more strongly contribute to this basic income, to the financing of this basic income. Yeah? The poor people who have not much resources, they receive. They are on the receiving end. Yeah? So that basically means that this green tax shift, taxing this economic rent and distributing it as a basic income, is a kind of effective, fair redistribution. Yeah? So surplus profits in our current economic system, a lot of surplus profits are privately owned, so the landlords and so on, they earn this surplus profits. With the system that I propose, the government revenues distributed as a basic income, it means that the surplus profits is goes to the community, is fairly distributed amongst all people. As a basic income is not financed by an income tax, a tax on labor, the workers do not have to bear the cost of financing the basic income. So that's partly the revenues from taxing natural resources. They can partly finance the basic income, and this financement of the basic income, you avoid this complaint of, for example, some workers can say, I have to work and pay taxes to pay an unemployed, lazy person a basic income. I don't want to do that. But this has nothing to do with workers having to pay lazy people. So everyone has received a fair share. So it's purely from the idea of equality. The basic income is actually a basic right to which everyone is equally entitled, because natural resources belong to everyone equally. Now, this wealth also you can look at the wealth generated by previous generations. Yeah, it can also be taxed. So previous generations have produced a lot of wealth, machines, buildings, goods, and so on. And after their death, their wealth becomes part of the community. And so also an inheritance tax or wealth tax in some cases, can be considered as a taxation of this surplus profits of the economic rent. Similarly, economic rent is comparable to monopoly rent, or another way, monopoly rent is a special example of economic rent. So if you have a monopoly in the economic system, you can demand higher prices and earn extra income above what is required for your production. And so this extra surplus profits, if you have a monopoly, the surplus profit is privatized, but the government could tax this surplus profit. And this tax goes into the community again. So adding up all these taxes and paying them out as a basic income is actually equivalent to giving each person an equal share of all the natural resources and all the inherited wealth and all the monopoly claims that some companies in the economic system can have. And there are a lot of these kinds of monopoly things. For example, only banks have the right to create money and to demand interest from this money that they created. That's a kind of monopoly right that banks have. And I, as an individual, I cannot do the same thing. I cannot simply make a bank and do the same thing that banks do, lending out money out of thin air, money that I basically don't have. So creating money out of thin air, lending out money and then demanding an interest. Banks have the kind of monopoly rights, and that's why banks get so rich, the bankers. And that's not that's a surplus profit that those bankers earn. It's unearned income, and this unearned income can also be taxed and distributed as a basic income. And this basic income, then, if you tax all these things, it's sufficient for a person to buy all the natural resources and all the inherited wealth to which one is entitled. So even a poor person with the basic income can buy the equivalent of a piece of land, a machine, oil, seeds, all the things needed to produce food. The only thing that you have to do is produce the food, the labor. That's not in this basic income included. So everyone receives a piece of fertile land and fuels, minerals that were made by previous machines and so on that were made by previous generations. You receive an amount of CO2 absorption capacity. You receive a part of the electromagnetic spectrum to transmit messages by SMS, for example. Also, the electromagnetic spectrum is a finite resource, and if you claim a part of this finite resource, the spectrum, for yourself to transmit messages, you exclude others from using this part of the spectrum. And also that exclusion can be taxed, and tax can be distributed as a basic income. So these are all things that you get for free with this basic income, because you can buy them with your unconditional basic income. And now basic income financed by a tax on natural resources and inherited wealth can arouse no envy. There is no government coercion, because no one is forced to relinquish part of their own productivity or their own income, their own value creation. So we have to make a distinction between the added value in the economy, the value that you add by your labor, by your entrepreneurship, by your investments, and then the ground value, the value of this economic rent of the natural resources. So this has a lot of advantage. Now let's, after explaining all this, let's look at the advantages of this system. First of all, there are, if you look at these win-win-win measures, with veganism, for example, the first advantage was for the animals, and that related to a right to bodily autonomy, a basic right. Also, the other win-win measures always relate to a right to bodily autonomy of a vulnerable or exploited group. Animals, in the previous case of veganism. In the second case here, the economic system, it's the workers. And in the next video, I will speak about family planning, and there the vulnerable group are the women. And also the women have a right to bodily autonomy. So now let's look at the workers. The workers, they have a right to bodily autonomy, which means that slavery is not allowed. And if the government would tax labor, a high tax on labor, that can be considered as a kind of subtle form of theft or slavery. There are some exceptions, it's complicated, but libertarians, for example, they claim, and it makes sense, that some kinds of taxation of labor is equivalent to a kind of slavery, so that people have to work and cannot receive the benefits of the work for themselves. They have to pay the tax of this work. So workers own their own labor. So the body of the worker creates added value by processing land and raw materials. If the worker had not been active, had not been doing the activity, there was no added value. But that added value belongs to the laborer himself or herself. Everyone has a full ownership of their own body, and therefore to some extent also over the added value that is created by their own physical activity. So a high tax on labor is a kind of use as merely a means, because the bodies of the workers are used against their will, and the workers are forced to give away a part of the added value that they created by their own labor. On the other hand, the economic value or the economic rent of land and natural resources are not created by workers. So a taxation of this economic rent is not a violation of the right not to be used as merely a means. Okay. So that's the first basic advantage for the workers. Second, there are a lot of advantages in economics in terms of welfare. The advantages for the workers and the unemployed. If you look at the tax on labor, if you tax labor, there's always an economic loss of value. It's called the dead weight loss. And that is because supply and demand of labor are not price inelastic. If you tax labor, there is always a kind of economic inefficiency. Basically it means that some potential win-win situations are not possible by taxing labor. So a worker and an employer and an employee, they can have a mutual beneficial relationship, okay? But with a tax on labor, some of those potentially mutually beneficial relationships between employers and employees cannot be created in the economy. So unlike a tax on labor, a tax on the economic rent of land and natural resources does not create an economic allocation inefficiency or a deadweight loss, a loss of the productive potential of the economy, because the supply of the natural resource is perfectly price inelastic. The supply of labor is not perfectly price inelastic, so a tax on labor will generate a loss of efficiency and a lower economic surplus and productivity. By taxing labor, some economic incentives are distorted and some useful economic activities are suppressed. So a labor tax penalizes workers who must see a part of their work and generates additional unemployment because the gross wages rise. So you have unemployment. Reducing taxes on labor benefits the workers and increases the employment rate. Adding a basic income then will also improve the quality of the workers' jobs and the flexibility of the labor markets, making it easier to, for example, to share work, to find new work. With a basic income, the employers are required to provide more attractive jobs, and employees can put more pressure on the employers because the employees become less dependent on the wage labor to meet their basic needs. So unlike conditional unemployment benefits, an unconditional basic income can help poor people out of the unemployment trap. So that's one of the problems with conditional unemployment benefits, the unemployment trap. Next, there are potential benefits for consumers by this taxation, especially the poor consumers, because the rich consumers who consume a lot of resources, they pay a lot of tax, and this tax is distributed as a basic income. And you can also look at it this way. So by reducing taxes on labor, the free market is less disturbed and economic efficiency is increased. Especially products that require a lot of work but make little use of valuable natural resources, they become cheaper for the consumers. And the products that have low value added by labor and no externalized costs, so all external costs, environmental impact costs and so on, are already internalized, they will retain the same price for the consumer. So the consumer does not experience a disadvantage. And that is again because the supply curve is price inelastic. And the supply curve of this natural resource, it's vertical. Which means that the burden of a land value tax, for example, and the natural resource tax, will fall on the owners of land and resources. So the owners cannot pass on these taxes to the consumers or the lessees. So tenant and mortgage borrowers, they always pay the full land value. If you rent an apartment, you pay the owner. You always pay the owner the full value of the apartment, including the value of the land. So you already pay the owner this land value, the economic rent. Even in a system without a land value tax, you, as a tenant or a mortgage borrower, you always pay them. But in a system without land value taxation, the tenants pay the owners or the landlords, and someone with a mortgage loan pays the full land value to the financial institution, the banks, for example. In this case, the income of the land value, the economic rent of natural resource, is privately collected by the landowners and the bankers. Each tenant and each borrower is already paying the equivalent of a land value tax to the landowners or the bankers. And with a resource and land value tax, the tenant pays the same amount of economic rent, but now the income generated by this economic rent flows to the government or the community instead of the private landowners or the resource extraction companies or the bankers. And then the products that are what this means is that with the system, the green tax shifts and the basic income, the borrowers, they pay the same price for the renting the apartment. It's the same price, but now it basically means this economic rent is not privatized, but it's socialized, so to speak. It goes to the community, it goes to everyone again. Other advantages of this system in urban environments for people living in cities. With a land value tax, the vacancy rate in cities drops because landowners want to use their land as fully and efficiently as possible. The urban expansion by urban sprawl will decrease because poorly utilized land costs too much money and on land value taxes. And the current system of taxation of property taxes tax the land value of a plot of land is too little, and the taxes and taxing the added value is too much. So this basically means in the current economic situation, construction and maintenance of buildings, that these economic activities are taxed too much. These are labor activities, and the non-labor activities, simply owning a piece of land, is not taxed enough in our current system. So consequently, activities that create added value, such as useful investments and improvements of buildings and efficient use of land, are discouraged in the current system. For governments, it has benefits. For example, tax compliance. Many natural resources, in particular land, are immobile and very visible, making tax evasion, avoidance and fraud much more difficult. So you cannot escape with your land to a tax haven, for example. You cannot move your land to another country where it's cheaper. In terms of government budget, it has benefits for labor redistribution. Also, interestingly, for compensation of public investments, this system is interesting. So by public investments in public goods, for example, the construction of roads, of sewers and electricity networks, the construction of nearby hospitals and schools, and security and emergency services and maintenance of public parks in the cities. By all these public investments, the value of a land in a city increases. So a landowner who owns a piece of land and an apartment, the landowner does not pay for this public investment, or only pays a little bit due to some taxes that he has to pay. But the landowners who don't have to pay for this public investment, they see the value of their land increasing without them having to pay for it and without having to work for it. Yeah? So if the government invests in public transport facilities and so on, the value of the apartments around the train station, for example, increases. This increase of value of the apartments, of course, for the persons who own these apartments, the landowners, it's good. They have they receive an unearned extra profit, because the rent of the apartment can increase, so they can ask higher rent. Tenants pay higher rent to the landowner, and so the tenants, rather than the landowner, pays for the cost of the public investments. With a land value tax, on the other hand, there are no longer undeserved profits for landowners who benefit from land appreciation through these investments by the community or by the government. And then there's the famous Henry George theorem of public investments in public goods, which says that a lot of these public investments can be fully financed almost entirely by a land value tax, because the rising land values leads to a rising tax revenues. So if the value of the apartments, of the land of the apartments increases, the government can raise higher land value taxes and receives higher revenues. And with these higher revenues, the public investments can be paid. So you see there are a lot of benefits. It might increase the stability of the economy. It also solves the problem of property rights. So resources and land value tax provides an answer to the question what may be privately owned. The added value that you create by your labor is your private property, but natural resources are collectively owned. They cannot be used exclusively by a person as long as that person reimburses the community for this exclusive right via resource and land value tax. So paying such a tax is equivalent to borrowing instead of owning the resource from the community. If you pay the land value tax on a piece of land, you borrow the land from the community. By paying the taxes, we do not acquire any ownership, but instead we have a license to use a resource. And if one returns the resource in a worse shape to the community, so giving back an overexploited, eroded farmland to the community, so you borrow a piece of farmland and you destroy the land, and then you give it back, okay, then one must pay an extra compensation for the damage. Other possible benefits in terms of justice, for example, a green tax shift combined with basic income favors the poorest people, the unemployed, for example, and the wealthiest people, the landowners and the bankers, they pay the most. So a land value tax is with basic income is progressive. It is mainly paid by the rich, the ones who possess a lot of resources and who earn the most surplus profits. Combined with the basic income, economic inequality will decrease. The basic income, financed by taxes on natural resources and inherited wealth, really comes down to a reallocation of those resources with the greatest benefits for the poor. And finally, so we have the benefits for the workers, the benefits for economic welfare in general society. And then finally there are the environmental benefits for the environment. With a taxation on the use of natural resources, it results to a less use of those resources. High taxes on labor and low on natural resources incentivizes companies to invest in resource-intensive industries and not much in labor. Companies will rather use machines that consume a lot of fossil fuel because energy is cheap, instead of recruiting workers who are more expensive due to the tax on labor. So by shifting the taxes from labor to natural resources, the production will become more labor-intensive and less resource-intensive. And so the impact on the environment will decrease. One will invest more in efficient alternative technologies and create jobs in environmentally friendly sectors. Environmentally friendly, labor-intensive economies, such as the repair economy, will increase. Also, it results in a more efficient use of resources. With a resource and land value tax, resources are used more efficiently and economically. One can better take into account the finite nature of resources and the finite capacity of ecosystems to process pollution. And it makes it possible to decrease our environmental footprint. Let's take it as an example. A tax on land reduces urban sprawl and vacancy rates of buildings. And a more efficient, compact use of land creates more space for nature. And suppose a CO2 tax, a carbon tax, will be 100 euros per ton of CO2. Let's look at the example of a carbon tax. So the compensation fee for the community for the exclusive right to use a part of the Earth's carbon absorption capacity is equivalent to 1 ton of CO2, is equivalent to 100 euros for 1 ton of CO2. 1 ton of CO2 costs 100 euros to the community. Now, if you manage to reduce your own emissions your own CO2 emissions by 1 ton, you will have to pay 100 euros less in taxes. Yeah? So this saving is much more than the decline in your basic income. So that if the basic income is financed by a CO2 tax, suppose, if you reduce your CO2 emissions, then of course you pay less taxes, and then the global basic income will decrease. But for you personally, this decrease is very small because the basic income is distributed amongst many people. So if there are 7 billion people and the basic income is decreased by 100 euros, well, 100 divided by 7 billion, that's the decrease that you experience for the decrease of your own basic income. And okay, so your basic income decreases, but your costs decreases much more, and so for you as a person it's much more efficient to reduce your own CO2 emissions. So everyone has an incentive to reduce CO2 emissions and resource use. So this finishes the second video. It's a long video, it's a very complicated economic measure. It's a hypothesis, basically. It's not really well tested yet. The idea is that this green tax shift and basic income, some countries or regions should be ready to experiment with this, and preferably bigger regions as the European Union can start experimenting with this kind of tax shift. In a final video in this series, I will explain more about what we as an individual can do to support this idea. So see you next time.